Vandana, what's most interesting for me here is the battle lines that have now been drawn on the outlook between OPEC and the EIA. So walk me through this. How do you see the balance of supply and demand shaping up in the months to come?
Good morning, Dan. And battle lines is the right phrase. I think it has left the market quite befuddled. And of course, we are talking about nearly 1 million barrel per day gap in demand growth projections for this year between OPEC and the IEA. Of course, OPEC is by far the most optimistic, not just compared with the IEA and the US EIA, but market consensus in general. And that has left the market a bit confused. But I would argue, Dan, that this has been going on for a while now. It's not a phenomenon of this year, of the past few months. By that I mean the huge growing dichotomy between OPEC plus sounding more and more optimistic, bullish on demand growth, and the IEA in the completely opposite direction. I think what this has led to is really the market shrugging off, by and large, all such projections, and perhaps just taking it one day at a time.
Indeed. And when you look at the situation here, the IEA says the clean energy transition calls for the scaling back of oil production. I understand that, but that also comes as OPEC says that demand is continuing to rise. So Vandana, when you look at this situation, what are the consequences for oil companies and global economies if we see production being scaled back as demand for oil continues to rise? That puts us on a dangerous collision course, no? An unprecedented situation.
Absolutely, Dan. I think I've been saying this for a long time. I think personally, it's very worrying. And again, this is not a recent phenomenon. We've seen this from before COVID, and it certainly seems to have accelerated after COVID. And during the phase of the global demand rebound post-COVID, that the IEA has actually increasingly been talking about bringing forward its forecasts of global oil demand, and not just oil demand, fossil fuel demand, starting to decline, to plateau very soon and decline. In fact, the IEA late last year said that it expects all fossil fuel demand, so not just coal, but oil and natural gas as well, to peak before the end of this decade. And that's has sort of defies credibility, but all said and done, we see this phenomenon reflected and rippling across the industry, across the investment sector as well, that oil companies, and this started with the majors, global majors, increasingly pulling back investment from oil and gas. But at the end, so as a result, we are left with there's a little bit of a pivot back happening. But if we look at what Shell, BP, and their US peers are doing. But at the end of the day, that has really left just the major Middle Eastern producers actually investing in producing more oil. So going back to my point on fear, where I started, I think my concern is that we will be left with not enough oil supply, and certainly not enough spare capacity to meet global demand way before global demand is actually starting to shrink.
Interesting environment right now. We've just seen OPEC roll over voluntary curbs. What are the influences on market sentiment moving forward from here? Geopolitical uncertainties, conflict, sanctions, perhaps becoming a bigger risk through the second quarter. What does that mean for OPEC policy?
Yeah, so right now, the two main drivers of market sentiment are what's happening in Gaza, of course, the festering crisis over there, which is sustaining, I would say, $6 to $7 of risk premium in current crude prices, and what's happening with the economic sentiment. As far as the economic sentiment is concerned, it pretty much takes its cues from what's happening with regard to the outlook for the US economy. And within that, we see quite a lot of risk on, risk off swings based on what the market at any point is thinking the Fed is going to do with interest rates. So if we look out into the second half of this year, I think what the Fed does in June with regard to interest rates is going to be key. As of now, of course, the market is heavily betting on the first interest rate cut happening in June. But even if that happens, I think after that, the speculation and the nervousness will continue with regard to what is the pace of the tapering. OPEC Plus and what it does with its output cuts, to some extent, the way I see it is has been sidelined as a market influencing factor. The rollover of their voluntary cuts by just 9 out of the 18 members that are actually supposed to be participating, that was expected. That was probably the last easy decision for OPEC Plus. I think come June, when they're going to meet to decide what to do in the second half of the year, I think they have far more challenging questions awaiting them.